Okay, place your lot size, then buy, click, or sell.
Right.
Okay, hold on, let me see. And we're euro versus. Hold on, I'm going to have to add that selected symbol.
Oh, don't worry about the symbol yet, the pair yet. This doesn't matter yet right now.
Okay.
All right. So you have your app, and those trades would come through. Let's just walk through taking a trade. Let's do that. So a trade comes through, and it says you're buying USDCA. You're going to ignore what the pair is right now. But let's just say we're buying.
Hello? Hello?
Yeah.
I was hearing a whole bunch of static. Sorry.
Yeah, I'm going to mute the lines. And then if you guys have questions, just put it in the chat. There's a way you can write in the chat.
Gotcha.
And then I'll answer those as we go. All right, perfect. There's one chat already. Let's see what we got here. Just make sure I'm not missing out on any questions that need to be answered. Why is my computer doing this? Oh, mute. Okay, that was just Natalie. Okay, yeah, we got it now, Natalie. All right. So the trades come through the Signal service. All of you guys are in there, obviously, because that's how you knew about tonight's meeting. And for example, in this case, it says I'm buying. Let's stop right there. Forex, unlike the stock market, you can make money whether the price goes up or whether the market goes down. One of the major things that attracted me to this market. Now, buying means that you expecting the price to go up. I gotta unmute. Guys, I'm gonna unmute. I like interaction. Unmute. I'm just gonna ask that if you're not talking, can you mute yourself? There's a way that you can mute yourself so that we don't hear the background noise. And then if you want to say something, say it. All right. If you look on the left side, somewhere on your screen there says mute. You can mute yourself. I'm hearing a little bit of background. Okay. So buying means you expecting the price to go up. You guys with me still? Sell. On the other hand, if it says I'm selling, that means we're expecting the market to go down. Okay? So buy means up, sell means down. The way I like to remember it, if you go to the store and something is on sale, like a pair of sneakers or whatever, that means that they drop the price for you so that it's at a more affordable price. They drop the price. So you think sell down, buy. And like the way I think about buying is when I was a little kid with my mom, we'd go to the store. Seems like all the things that I wanted to buy were the things that cost the most money. Like all the sneakers that was hot, those are like the most expensive sneakers. Not that I looked at the price and said, I'm trying to get the most expensive sneaker. It's just like the hottest sneakers were the ones that cost the most. The ones that I wanted to buy, the ones that the price was up. The ones that was on sale, the price was down. That's kind of like an easy way to remember buying and selling. But the way we're setting it up, you don't even have to worry about that. Because if we're buying, like this case right here, let me go to that picture so you would see how that would look on your app. All you would have to do in that case is click on buy right here. There's a place on your app where you hit the button and it'll take you to this page. I got a picture for that too. And you just click on buy.
Hey, Shane.
Yes.
Now, I'm seeing you have that variable circle. What is the difference between the negative to the positives?
Okay. This case right here, that's just if you wanted to bring the price down. So you click on that next one, it would make it a lower value.
Okay.
But you want to literally type in the price, the entry point that you want. You're going to enter the lot that you want. So if you want to put
what's up? Oh my God.
If you want to put a 0.05, you can put a 0.05.
You guys working down there too? Huh? These guys, they working down there?
Hey guys, if you are here and you're not talking, please mute.
Oh, they probably is. They hear me. When I'm turning around, he did like that.
I got it.
Yeah,
One second.
yeah. They work for a long time. Thank you, brother. No problem.
Okay, there we go. I think I found the culprit.
Thank you.
No problem. So in this case, you would just you're gonna type it in. Now, if you were just doing even numbers, you would just, if you wanted to go a higher value, or if you just wanted to put that value, you could just click on that value. In a case like that. All right.
Okay.
All right. So let's go back to our signal. Let's go back to our signal. Okay, so we know the difference in buying and selling. The pair, USD/CAD. Chris, do you know how to find the pair yet?
Yep. Yeah, I did.
Okay, good. Everybody else knows how to find the pair. You can type one in your chat if you like. I think everybody, I'm looking at the faces here. Everybody here knows how to find the pair. The price. What about the price, Chris?
The price is $1.30 for some odd cents.
Right. So this is going to be for everybody. This is key. Before we go to that part, after buying or selling, the most important.
Oh my God.
Somebody new join us. That's okay. Let's see who was that. Jasmine, how you doing, Jasmine?
I'm doing good, and yourself?
I'm doing awesome. I'm doing awesome. I want to welcome you to our new member orientation. Jasmine just joined today as well, guys. So everything is going to be new for her. I'm just going to kind of catch you up really quick or see where you stand. Have you had any chance to download anything yet? Has Earl kind of given you the app that you needed or sent you to where to open up your broker's account and things of that nature?
I started looking into it, but then I had to sign into my class online, so I didn't get to finish everything.
Okay, so just to give you, you can take notes tonight on what we talk about, but the most important thing that you're going to want to do from tonight is go to this site right here. You have a pen and paper, Jasmine?
Yes, I do.
Perfect. You want to go to www.tradersway.com.
Could you repeat that, please?
www.tradersway.com. TRADERSWAY.com. Once you go to this website, you're going to have the options to open a live account and a demo account. I would suggest you guys open both. Yeah. On this journey on the highway to freedom, yes, we're focusing on giving you signals, but we're also going to be doing some teaching as well. I have a YouTube library of different videos that we recorded over time that teaches you how to trade with the strategy that we use here. Okay? So what I suggest as you're learning how to trade, you take those trades on your demo account. The trades that we put in the signals channel, you want to take those trades on your live account. We got a chat. Let's see. Oh, most likely be content. Okay, got you. All right. So, yeah, so we'll be taking those trades from our, you got the difference. All right. So tradersway.com. And, you know, you just set up your live, your demo, and then you'll be caught up to speed with that. The other thing, Jasmine, that I did cover with the group, let me ask you that question. I'm sorry, I'm just interrupting. I gotta hear the voices talking to you. Jasmine, have you had a chance to download the app on your phone yet?
Yes, I did.
Perfect. That's even more important than, you know. So you have the MT4 on your app. You're gonna be able to follow along with us tonight then. All right, good. All right, so where were we? Okay, so in a case like this, I'm buying, just for your notes, Jasmine, to catch you up really quick. If we say we're buying, we expect the market to go up. We expect price to increase. This is the price right here. So we're expecting this price to increase with this buy. If we're selling, we're expecting this price to decrease, which is the beautiful thing about the markets, because it doesn't matter whether it goes up or down. We're still making money as long as we pick the right direction, okay? All right, so now, Jasmine, you probably don't know where to find the pair. I think I have a picture on that. Once you have your app, you can play with it, touch it. It's like a new toy. You want to just touch it and play with it and do all kind of stuff with it. There's a section that you'll find right here at the bottom that looks like this with the arrows going like this. If you click on that, a list of the different pairs will drop down. So whenever we're putting a pair in there, that's how you find your pairs, and you just hit that pair, and it'll pop up. This button right here, the plus sign, is how you add a, like you want to put a sell or a buy, you click that plus, and it's going to give you a prompt to take that position, whether it's a buy or sell. It's literally going to lead you to this page right here that we were on, right here. And at the bottom here, you sell or you buy based off whatever we put in the signals channel. You selling it or you buying it. All right, so we got that. Let's go back to, boom. All right, so now, besides knowing whether you're buying or selling, besides knowing what pair that you're going to actually take your position on, the most important thing with trading, our strategy especially, is going to be your lot size. And every single trade that I ever put in the signals channel, I put this here as a reminder. This right here, guys, will make you or break you. Now, signing up with TradersWay.com, they give you what they call a lot of leverage. When you sign up with Traders Way, you want to sign up with a 1 to 1,000 leverage. And I am recording this again tonight, guys, so if there's something that you miss or you need to hear over, I'm going to send out the recording to you so you can play it as many times as you like to catch yourself up. But you're going to want to sign up with a 1 to 1,000 leverage, which is going to allow you to, trade, how can I say this? It's going to allow you to, let's say you had a $100 account. You could literally take a 1 to 1,000 leverage and turn $100 into $1,000 in one trade. Now, do I recommend taking that type of leverage? Of course not. But with a $100 account, you can literally, let's, for example here, with a $100 account with Traders Way, you could literally put a 50-cent lot size on it. Now here, what are we recommending? A 1 cent to a 2 cent for a $100 to $200 account. At a 50-cent lot size, you should be having a $4,000 account, $4,000 plus account before you even use a 50-cent lot size. A 50-cent lot size, that's $5 a pip. So you see the difference I'm talking about here? Traders Way will allow you to use a 50-cent lot size with a $100 to $200 account, but we're saying use a 1 cent to 2 cent lot size with that account. Hope that's sinking in. The reason that we do that is because with a 50-cent account on a $100, with a 50-cent lot size on a $100 account or a $200 account, and remember, each pip on a 50-cent lot size is $5 a pip. So that means how many pips does it take for you to blow a $100 account?
20.
20 pips. 20 pips. Let me give you guys an example. We just closed out 62 pips on the GBP JPY this morning. This afternoon, about 3 or 4 o'clock. I don't know if you guys saw it. We closed out 62 pips. We got in that trade last night after the webinar. Let's say about 11:30. I think I put it in there 10:30, 11:30, something like that. 11 o'clock, something around that time. And we were in that trade all the way up until today. Before we closed out that trade at 62 pips, that market had went against us about 30 pips, maybe 40 pips, maybe. So now, if you started your account with $100, $200, and you would have put a 50-cent lot size, guess what, guys? What do you think would have happened?
Your balance would have went to zero.
You would have blew that account. You would have blew that account. That's how we say it in this game. You would have blew your account and you'd have been to zero. and we would talk about we're closing out 62 pips today, and you'd have been like, well, I'm not closing out 62 pips because you closed down on 0. So this trading strategy is really what gives us the edge on the highway to freedom. I meet a lot of traders. I was one of them at one point in time because I was led by a guy who said, man, I can show you how to take a small account and blow it up in no time. He was showing me how he was taking $500 and turning it into $5,000 in 1 week. He would take $500 and put $1 lot on it. But in a case like that, you have to almost like just know what the market is going to do. And let me tell you from right here, right now, nobody knows what the market is going to do. The market has a mind of its own. Anything can make the market just do something crazy. So the way we combat that is we use small lot sizes, what I like to call 1/5 of the normal lot size that you should be using. We use 1/5 of it. This allows us to stare adversity dead in its face. This allows us to literally trade without what you call a stop loss. Has anybody even had any experience trading at all, stocks, or futures, or anything, and have heard of a stop loss before? And this is for the new guys, really. I know our veterans here have heard of stop losses.
Yeah, I did.
Okay.
I haven't.
No, I haven't either.
You have it. Okay. Who said they did? That
Me,
was
Andrew.
Andrew. Okay. What is a stop loss, Andrew?
A stop loss is when if the market drops, you don't want it to drop below that line, so it automatically closes it out.
It automatically closes out the trade for you.
Yeah.
So, for example, with the $100 account, let's say you use that 50-cent lot. So what the guy would teach me, put a 5-pip stop loss. Put a 10-pip stop loss. So that means with my $100, if it went against me 10 pips, I don't want it to blow my whole account. So I'll put a 10-pip stop loss. The market goes 10 pips, it closes me out $50. So now I'm down $50. But they make it feel good because they say, well, at least you didn't blow your account. What about my $50 though? You know what I'm saying? So, there's a video that I'm gonna give you that teaches you how I don't use stop losses, that gives into the teaching of it. You know, I get carried away sometimes, and I'll be over here 3-4 hours just talking. So I love this game, but the way we combat it, we don't use a stop loss because what I find a lot of times, the market will go against you 20, 30 pips, 10 pips, or whatever the case might be, and then it'll hit your stop loss. You wake up in the morning or like this afternoon, and you realize that, well, if I didn't have a stop loss, I could have been up 60 pips. I could have been up 80 pips. But you didn't know that the market was going to swing an extra 30 pips down before it went up. Nobody knows that. Nobody knows that, guys. And so I said, you know, I figured out, well, not me personally, I learned that if I use a smaller lot size, that I don't have to worry about my account being blown. Because, I mean, nobody knows what the market is going to do, but it's not going to move 1,000 pips. It had to be something crazy like Armageddon. I mean, have you guys heard of Brexit? Brexit happened in Europe. That was last year sometime, where the Great Britain was breaking away from the euro. That made the market move something crazy overnight. I mean, it was thousands of pips that it moved, but there was warnings that it was going to happen. So, for example, if we use a 0.01 lot size, that's 10 cents per pip. 10 cents per pip. So that means that the market would have to literally move against me how many pips before it blew a $100 account? It's like 1,000 pips, right?
Yeah.
1,000 pips, guys. If I'm in a trade that moves 1,000 pips before we go into profits, then quit right away. Quit right away. That's not a good trade. It just doesn't happen anyway. We rarely be in a trade that goes 100 pips against us. But guess what? If it did, we're still okay. Because if it went 100 pips against us, we're only down $10 on a $100 account. So what happens is we're able to trade without a stop loss. We're able to let's say when the market goes against us like that, we're not worried about it. You can go to work and be chill and be cool. And I say that, and I know to the new guys, it's like, okay, yeah, that's cool. But I say that because I'm a trader who, like I said, have been in trades where I was trying to get, I was greedy, and I wanted to turn my money over right away. Because in Traders Way, you can do that. Because on the other side of that, I'm talking about losing money right now, but let's talk about the other side. If I put $100, if I had a $100 account, and I used a 50-cent lot, remember, a 50-cent lot, that's $5 a pip. So if I had a $100 account, and for example, let's use today's example, a $100 account, a 50-cent lot, let's say we close out 60 pips. Guess what? I made $300 today on my $100. That means in 1 day, I took $100 and flipped it to $400 in 1 day. So that greed is something that you have to throw out the window. And for me, it was hard at first because I was like, man, and you know what? I had success. There were trades that I had success doing that. I've had times where I took a $200 account and flipped it to $1,800 in 2 or 3 days. And that type of success kept me chasing it. It kept me chasing it. But what will happen, guys? You will only be chasing because you want to win some trades, but it's the trades that you lose that'll keep you dizzy, that'll keep you going in circles, that'll keep you not really getting anywhere. So you feel good about the trades that you win, but what about the ones that you lose? So we're going to touch on a little bit later, and Femi touched on it last night. This is why that pathway to predictable profits, that chart that we use, this is why that chart is so crucial. Because it shows you that you don't have to be greedy doing what we do. You can take these minimum lot sizes and build your account little by little by little, and you're going to get to your destination faster than you would get by putting a 50-cent lot on a $100 or $200 account. And like I said, this is the most important aspect of our trading strategy. That's why I'm taking this amount of time to go over it. You guys still with me?
Yeah.
You guys feeling the importance of it?
Mm-hmm.
Okay, good. And I say that because, like I said, you can blow your account here. I don't care if you had $10,000. The market makers and your broker, they don't care, because on every winning trade that you take, every trade that you win, guess what? Somebody lost money. Every time you lost money, somebody else made money. It's not like, well, you know, that money just went out in the clear blue sky. No, every time you win, somebody lost. Every time you lost, somebody won. Okay, so again, with these lot sizes that we use, and I'm not trying to scare you guys out of an opportunity, but at the first day, I want to just be blunt as possible so that you guys don't get to a point where you're getting greedy, because it's very easy to get greedy, especially when we're winning trade after trade after trade after trade. You're like, man, Shane is good. I can over leverage. Shoot, he is so good with his signals. And I guarantee that time that you over leverage will be the time that you just take a big hit. You're like, damn, I shouldn't have did it. Guys, I'm only talking from experience. Wait a minute. We got some other traders on the line. Miss Natalie, we was talking tonight. Natalie, do you mind me kind of like, can you kind of confirm with me what I'm saying here?
Yes, Shane is very correct. The green eye monster will have you in the hole if you are not properly using risk management. I've been doing Forex now for about a year, having some success here and there. Back in October, I funded my account with about $500. Had a couple of good trades, and then there's one trade using my phone, and I forgot to change my lot size back down to 0.1 where I should have been at from the start. And I watched this trade just literally eat my account up, and I was like, it's gonna go back up. And I would not get out that trade. My trade went down so bad. But you have to use proper risk management. Do not let the green eye monster get you.
Mm-hmm.
Shane is going to teach us how to use smaller lots, but and without the stop losses. because I can also testify with the stop loss. You put your stop loss in, okay, it's going to stop me out of the such and such, but you don't realize it's going to take you so far and take you out of your stop loss, and now you're stopped out of the trade, and the trade is going to go in the direction that you wanted to go in anyway. Now you done missed out because you got stopped out.
Mm-hmm.
So I can testify to that also. I'm like, dang, I got stopped out, and everybody else is up in the air now, and I'm stopped out.
There you go. So that's the challenge right there. That was the challenge for us. How do you trade, make money, and not use a stop loss? Because you're like, okay, if I use a stop loss, I might get stopped out, and then later on realize I would have been in profit. But if I don't use a stop loss, and I don't have the right risk management, there's a chance that I blow my account. And we don't want to be gambling. That's another form of gambling when you over leverage account. This
Yes.
right here, guys, this right here, if you just simply stick to this right here. Now, at the humble beginnings, it might not seem like a lot, but it's better to take 10 small wins in the Forex than to take 2 major losses that are wipe away all your wins. That happens.
Can I say something, Shane?
Yes, you can.
When you just said that right there, the smaller trades, I think a lot of new traders get discouraged when they only trading that 1 cent lot, that 2 cent lot, and be like, oh, well, I only made $4.
Right.
And they look at somebody else's, well, they made $500. Well, I only made $4. So now, like you said, now they want to over leverage by putting in a bigger lot size to try to match up to somebody else.
Right.
And you're not ready for it.
Right. Well, you know what? At the end of this presentation, when we do the pathway to predictable profits, we're going to erase that too. You're going to be so excited about your $4 because you're going to realize it's compounding into something awesome. You're going to literally put a date on when you can use the 10 cent, the 50 cent, on up to the $1 and the $2 lots. Okay? So don't worry about the $4 as well. Thank you, Natalie. Thank you. All right. So guys, okay. So any more questions about proper risk management? It does 2 things. It does a couple of things for us. Let me just reiterate on it one more time. It allows us to trade without a stop loss. So that means that we can stay in a trade. We can go to sleep on a trade. And I say that because if you over leverage, you're going to literally be sitting at your computer watching it. Oh, please don't go. Please go. You're going to be watching it.
Right.
Just watching it because you're just hoping it don't go. Wait. And if it start going against you, you're going to start playing the God. And I mean, God does control a lot of things, but for some reason, I don't think he got nothing to do with Forex. I've been praying to him many nights trying to hoping he would take that trade back the other direction. And he didn't. He was like, I'm busy right now. I got nothing to do with that Forex. So this right here keeps us safe, guys. This keeps us safe. Any questions on risk management? Okay, another thing that it allows us to do, it allows us to stare that adversity dead in its face. Now, this is how we use the market going against us, unlike any other group that I've seen out here. When the market goes against us, and let me tell you this right now, we will enter trades. A lot of those trades, before they go into the blue, before they go positive, they sometimes, or a lot of times, will go negative first. Guys, please do not be scared about that or alarmed about that. We get to the point here on the highway to freedom that we look forward to that. When I see that market going against me, I'm like, oh yeah, I'm about to really get them now. Remember what I said. We use 1/5 of the normal lot size. The normal lot size. So now, if the market goes against us, let's say 20, 30 pips, and then it starts going back our direction, what do you think we're going to do?
Add a position.
There you go. We're going to add a position. So let's say I was down 20 pips on a pair. It went against me 20 pips, and I put a 1 cent lot on the first position. It went against me 20 pips, and then it started going back my direction. I put another position at the 20 pips. How many pips do I need to go up before I'm back in profits? Take a guess. If I'm in one position, the market goes against me 20 pips, and then I add another position at 20 pips. How many pips up from that negative 20 pips do I need to go before I'm in profit on my trade, on those 2 trades?
You
20
have to
pips?
get up back up to the 20 and then have the extra 10 directly in your profit.
Okay, that's one answer. That's incorrect. You only need to go back up 11 pips before you're back in profit. Not even the full 20, 11 pips. Once you move 11 pips, you call that dollar cost averaging. Because remember, you're getting profits on the second position because you put the position at negative 20, but once it starts going back up, remember that's profit. And as the first position is going back up, that one's decreasing the negative. So it only has to go back up 11 pips. I think that's a little bit deep for the new guys. But when we add, we're able to make more money on a trade because when it goes back up, now we're in profits on more than one position, especially when it crosses over and puts us in profit on the first position. Remember, this is being recorded, so I might be going a little fast or speaking a little bit above the understanding at this point in time. You will be able to, repeat it, ask questions, blah, blah, blah. All right. So that's another way that we're able to take advantage of risk management while we trade by adding positions because we're only using 1/5 of our normal lot size. And again, I say that because sometimes the market will put us in negative before it puts us in positive. That's a good thing on the highway to freedom because now we can add the position. If you have two positions on one trade, you're going to make more money. So if I put one position in and it goes immediately into profits, I'm only making the money on one position. You see what I'm saying? But if I have, if it gives me to add a position, then they both go into profits. Hey, I'm making now the money on both of those positions. All right. So that's it for risk management for tonight. And again, whatever amount you start with, and that's up to you, what you guys decide to start with. I always recommend starting on the first level because it gives you like a sense of accomplishment knowing that you went from $100 and you built that from $100 or $200 and you built it up. And another thing is you're not starting off with as much risk. You're starting off with a small amount. So, and then you can build it up. So whatever you gain on top of that, that's all extra money to you. And it gives you like that kind of sense of kind of like freedom in a way, I can say, or just give you a sense of like, I'm playing with house money. That's the way to look at it. I'm playing with house money. And don't despise humble beginnings. Some of you guys know Kerwin. Kerwin invited a couple of you guys on. I think he invited, I definitely invited Andrew. I think he invited you as well, Chris. Kerwin has been rocking with us with the Signals channel for since the 6 weeks now. Kerwin has literally taken his $100 account and gained up to $1,600 in that amount of time. Now, don't get me wrong, I did have to check him on his lot size a couple of times. I say, oh, Kerwin, what you doing, man? That's a little bit larger lot size. He got a little carried away. Lucky for Kerwin, it went in his direction. Again, you still want to stick with it, but he was able to build that account from 100 to 1,600 in 6 weeks. We have stories here, you guys might know Lawrence, from $200 to $7,000 in 13 weeks. We have other stories. A young lady took an account in 1 week from $100 to $1,200 in 1 week. Now that is over risking, but I'm just stating that point to say don't despise humble beginnings of starting at $100 and $200. And we're going to touch on that a little bit later as well. Okay? So now that we know the importance of lot sizes, when we put that in there, let's go to this picture. Let's go back to this picture.
What?
This is where you would put your lot size in, depending on whatever size of your account. You know to put sell, and if it's a 0.01 or a 0.05 or a 0.10, you just click on this and you type it in right there.
I want it to remain the way that it was.
Okay? All right. You guys still with me?
Yes, sir.
Susan?
Yeah, I'm still with you.
Okay, cool.
Yeah.
Cool.
That was the whole hustle.
Yeah,
Say that again?
Susan's still here.
Okay, cool. Susan, is this new stuff for you? Is this any of these things new that?
No, it's refreshing me. It's refreshing me. I'm enjoying it. It's refreshing me. Some things is, yeah.
Okay, good. I want to make sure it's a benefit for us all. All right.
Yeah.
What else do we need to cover up of this taking this position? Second position. And another thing too, guys, when it's time to take a second position, this is what I do. I'll just put second position so that you know, okay, we're adding the second position to this trade. Now, the last piece of this puzzle, how to enter, this is all about how to enter a trade, is the price. where to enter the trade. Now, I pride myself on you guys either one or two things. You're either going to get the same results that I'm getting or better results. If you're doing these trades the right way, you shouldn't really be getting worse results. When I say results, I mean as far as your pips. Now, the amount of money that we're going to be making is all going to be relative on how much money is in the account. But as far as the pips are concerned, if we're doing it the right way, you're either going to get the same amount of pips or you're going to earn more pips. And you say, well, Shane, how is that the case? You're the one making the signal call. All right. So in this case right here, I put we entered the price at 1.30465. Now, when you pull up your chart, let's see, do I have, oh, I don't have the way it looks on, let's see, okay. Okay, perfect, I can use this. Now, when you pull up your chart, this right here is where the current price is at that point in time. Even better right here. This is what they call a ask and a buy. But you can just look at this right here. This is the current price of that market. Now, this doesn't relate to the trading the call, but let's say I put it at 121.965, and we're buying. Let's say I put it at 1.21.9. The entry, the paired, follow me, I'm talking as I go. So the entry price that I'm gonna put in the signal channel is one, and you can write this down, guys. 121.65, let's say. And we're buying this market, the EURJPY, and I'm buying at 121.65. And by the time you come to your app, whatever you were doing, whatever the case working, but by the time you saw the signal, the price was right here at 121.98. That means that the price has already risen above where I said we want to enter the trade. Because I put it at, remember, 121.65. The price currently is at 121.98. So remember, we're buying, that means it's above. Now, what a lot of people will do, because they're just so excited, oh man, new signal, I'm about to make some money. They will automatically come in and just click buy. They just click buy. What does that mean? That means that you're entering the trade at 121.98. You're not entering the trade at 121.65 where I said we should enter. So what does that mean as well? Two things. That means if this market starts going back down before it goes back up, that means you're going to be sitting in negative. Whereas I got in and the rest got in at 121.65, even if it goes down to 121.75, I'm in profits, still feeling good about the trade. On the other hand, you're ready to curse me out like, yo, Shane, what's going on with the trade, man? I'm in negative, Shane. We're posting in the group, we're in profits on the EURJPY. Let's make that money. Whoop, 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 yay, yay, yay. And you're like, nah, this is scam, this is scam, this is scam.
It has happened.
I know it's that. That's how I can talk on it. Something ain't right. Nah, they put all over my eyes now. I knew it had to be something. It's too good to be true. It's too good to be true. No, it's not too good to be true. What happened in that case, you entered the trade at the wrong entry points. So now the price is also important. So what you would do in a case like that, let's say you came in, again, I'm going to say it again. I'm going to repeat a lot of stuff so it can sink in with the new guys. Let's say, again, the entry price was 121.65 and you got to your app, you open up your app, you ready to get in that trade, you don't just run and click buy soon as you see we buying. Don't just run and just click buy. First thing you do, look at where the price is first. See if it's at the right time for you to enter the trade. If it's in a case like this, let's say it's at 121.98, you wait. Just wait. Wait for the trade to either come back to 121.65 and then click buy. That means you would enter exactly where I said enter. But you know what I would rather you do? I would rather you let that price go even below where I say enter. Now, if you're like able to be on your phone and catch the trade, like say 10, 15, 30 minutes, sometimes even an hour, 2 hours around the time where I post it, a lot of times, more times than none, it will be below the price. For example, we're in the EURCHF, live example, we're in the EURCHF right now. At this current point in time, and what did I put the EURCHF? I posted that, well, no, we're not. Let me see, the EURGDP. I'm on my other computer, guys. This computer right here, I don't think I have that chart up, but, oh. Give me 1 second, let me just put, okay, the EURGDP. Anybody on their computer? Film Dogs, you on your computer? Anybody on their computer?
You got that one, you talking about your chef?
Yeah, the Euro Swiss franc. What's the current?
You had it at 1.068.
Okay, I had it at 1.068. And what's the current price of the Euro Swiss franc?
Euro Swiss franc.
On your market. Anybody can answer that. If you have your phone and you're looking at your app, this could be like a good live exercise for us. If you're looking at your chart on your phone, let's see if you guys can tell me at least where is the current price. Don't answer, Natalie. I know you can find it. Let me see if the new guys can tell me what the current price, and Susan, don't answer either. I know you can know that. You know that too. Chris, Jasmine, Andrew. Let me see.
Is it at 1.06756?
Okay, 1.0756. Thank you. Oh, there you go. Well, we got some new people on. Let me check it out. Mike. Okay, welcome, Mike. Another number. I don't know that number. For all the guys who joined a little bit after we started, I am recording this session, so you will be able to go back and follow along as we go. I just want to let you know. So,
Thanks.
currently, the Euro Swiss franc is at 1.0756, Chris?
Yeah, you said the Euro CHF, right?
Yes, sir. Well, CHF. The other word is Swiss franc. That's what it stands for, but I'm sorry. CHF.
Yeah, it's got like a blue line on the chart. It's going for 1.06757.
Right, it's right. It's always moving around. Okay, and then Natalie, what did I put the signal channel at?
1.06838.
1.6838. And what are we doing?
Is at 06765.
No, I mean, like, are we buying or selling?
It was selling.
Okay. So now, guys, new guys. Well, anybody. This is for anybody. Is it okay for us to enter this trade yet? Can we enter this trade right now if we're selling the EURCHF? Is it okay to enter that trade now?
What's the price again we selling at?
We're selling at 1.06838.
Yeah.
Yes.
Yeah.
Yes.
There you go, man. You guys are scholars, man. We gonna make money in no time, man. Why is it okay?
Because it's actually below the value that you posted.
There you go. So guess what? If we close out, and that's about 1.068. So that's a difference of about, what's that about? That's a difference of about 8, 13, 5, about 5 pips. About 5 pips. No. 68 minus 75 is that's 7 pips. Sorry. And y'all follow my trade? On this message. 7 pips. That's a difference of about 7 pips. So what happens is if you was to enter that trade right now, and I close this trade out at 50 pips, how many pips would you have gained?
7.
No. Let's say you enter the trade right now, and now the market starts to go our direction. So 3 hours or tomorrow morning, I close the trade. I said, guys, we're closing at 50 pips profit from that price where I put the entry. How many pips would you gain? Would you gain 50 pips?
Yeah, 57 pips.
57 pips. There you go. So did you have better results than me or not?
Yep.
There you go. So that goes back to me saying you should either be getting the same results or better results. Now, I'd rather you get better results, and the way you get better results is you wait for the price to go below. If we're buying, you wait for the price to go below the point that I put in the entry. If we're selling, in this case right here, the EURCHF, for those of you who are active accounts at this point, you can enter that trade at this point in time. A perfect time to sell it with the correct outside. Even if you're doing it, enter the trade. But in this case right here, we could enter the trade because now you have a 7 pip advantage. There will be times where you, by the time you come to your app, you have a 20 pip advantage. For example, last night on the GBP JPY, my man King Isaiah, he's one of our guys in our group. He didn't get in the trade until early this morning. And to be honest, the GJ was acting funny. It was just like it didn't want to break out at all. It was just stuck there. It was going up and down, up and down, up and down, up and down.
I
But
put my sell in.
there you go. There you go. It was going up
Hey,
and down.
Shane.
Yes, sir.
Hey, question. What are the variables that affect the fluctuation of the market? What would cause for the decision for us to look at the market and then to make the move that we would make?
What are you asking? Like, what would determine whether you're going to buy or sell?
Yeah, what would determine that to buy or sell, and then exactly where at should we buy or sell?
Okay, I have videos on that, on the actual strategy that we use to make the decisions.
Oh, okay, excellent.
I
Okay.
want to give you
Hello,
guys the
hello,
keys to the YouTube library that actually teaches you how we're making these decisions. Tonight, we're
Okay.
just how you actually follow the signals.
Hello.
Okay.
Go ahead. Somebody else?
Yeah. Hello, Shane.
Mm-hmm.
This is Mike. Good evening. I have to actually run back to work. I've noticed that you said that you are actually recording this, and I came in towards the middle, and I would love to get it from the beginning, please. How would I be able to access the recording?
You're in the signals channel, right?
Yeah, I'm actually in this. No, I'm not in the signals channel yet. I'm about to be.
Okay, I'm going to put it in the signals channel, and it's going to be one of the videos in our YouTube library. We have
Awesome.
a YouTube library, guys. You want to subscribe to it because anytime I put videos there, you'll get the notification, and you can always keep up to date with what's going on.
Okay, and how would I access the YouTube library, please?
I'm going to put that in the signals channel tonight, right after this session.
Okay, Curran, are you on? Okay, I don't hear him. Okay, if anything, I'll check back with Curran to try to see if I could get it from him. Okay, I have to run back to work.
Not a problem. Thanks. Nice being on. Welcome to the team.
Thank you very much, brother. I appreciate it. I definitely like what I hear, though. Okay.
Sounds good.
All right, brother. The rest of you guys, good night.
Good night. Good evening.
All right. So yeah, good
night, man.
Good question, Chris. And I'm definitely looking forward to you guys learning how we trade. And like I said, we got a whole library, and that's another reason for that. The regular chat that we have, because we put a lot of times I'll put a chart out, and I'll say, hey guys, take a look at this right here. We got the Heikenashi's turning down, blah, 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 blah. For example, the GBP JPY, I put a chart out the other day on that one, how we took that trade off the 4-hour turning up. So it's going to be like a growing process. But tonight, we're just going to simply focus on taking things the right way. Okay? So you guys following me there where we going? You're either going to take that entry when it's at the price, or if we're buying, when it's below the price entry. If we're selling, for example, like the EURCHF, perfect example, it's above. So now you got a 7 pip advantage on me. 7 pip advantage. It doesn't matter if it's 20, 30, 40, 50. As long as it's above that entry, take the trade. And so when I closed out at 50 and we was down 30 pips, when I closed out at 50, you actually closed out on 80 pips. Got it? Any questions on that?
Nope.
Jasmine, you still with us?
Yes, I am.
You got it. You got it. All right. Chris, you got it. Susan, you got it. Susan, you got it. I think that's a little bit new stuff. I don't think I covered that with you yet. Susan, you got that?
Yeah, I got it.
Okay, that's very crucial, guys. That's very crucial. You don't want to just see the cell and just automatically go to the pair and just click sell. First thing you want to do, make sure you got your right lot size in there. Then number 2, and it's in order. Lot size, where's the price? Is it okay for me to even enter this trade yet? And then you click sell or buy. Now, let's make it even easier. Because what I'm talking about now, what does it require? It requires you have to be looking at your phone and trying to see when the price gets to that point. Some of you guys are busy. Some of you guys are at work. Some of you guys are, with the doing whatever you do. So, what do we have here? Let me look at my bag of goodies. Boom. There's something called buy stops, buy limits, sell stops, and sell limits. What this allows you to do is kind of create some automation to your trading. Okay? So let's use the same example with the EURCHF. At that point in time, it was at 1.0756. So in a case like this, you can literally go on your app and when you originally go in there, it just says market execution. If you click on market execution, this drop-down window will appear. Now, let's say you don't want to sit there and wait for the price to get there. Sometimes it can be hours before the price gets back to the original position. What you could do in the case of the EURCHF, if you wanted to catch it right where I said get in, you would click, in this case, let's go to the example. You would click a sell stop. And I'm going to send this chart right here to the group as well so you guys can have that. What this chart is demonstrating is, this is our entry. The blue line, this blue line represents the entry of 1.062 that we put in the signals channel. At the point in time, price is up here, above it. What will happen if you click on a sell stop and you literally type in the price? So you would type in, you would click sell stop, and then you would type in, it'll give you the option to type in the price where you want to get in the trade. So as the market is coming down, you can just set it up, go back to work. As soon as the price gets to this point, it will automatically put you in the trade. Now that's pretty hot. That's pretty hot because you can do that with every trade, really. You can literally just put in a sell stop if the price is above. Now, what if the price is below? And one of those examples I gave you, let's say the price was below, it was already in profits. But you expecting that, okay, it's below it right now. If the price goes back up and hits your entry, it will put you in the trade if you click a sell limit. So this is the price where it currently is. This was where I posted in the group at the blue line, but the price was already in profits. So you say, well, I want to wait for it to go back up. So the sell limit will allow the price to go back up, put you in the trade automatically, and then whenever it drops back down, you're back in profits. So this allows, no matter what the market is, let's say you're at work, you're busy. So I put in a signal, you can literally just go on your phone, it takes about 2 minutes. Set it up, buy stop, sell stop, whatever it is, type in the entry and go back to doing what you're doing. And whenever the price gets back to that point, it will automatically put you in a trade. Same goes for the buy stop, just the opposite of a sell. If it's a buy stop, we expect the market to go up. So let's say the entry was right here at the blue line. The price currently was below it. As soon as the price goes through that line, it's going to automatically put you in the trade. The buy limit. Let's say this was the entry, but the price currently was above the entry. Whenever the price drops back down and hits that entry, it will automatically put you in the trade. And then whenever it goes back into profits, you would already be in the trade. Some of you guys are going to be going to your phone and checking it and might even forget that you put it in and realize, whoa, I'm in profits. I'm in the trade. I didn't even know I was in the trade. I'm in profits. And that's the other beauty about that app that you have that called the MT4 that allows you to add some automation to it so that, you know, you don't have to sit there and watch it and wait for price to get to our entry. I really started teaching this because my boy King Aziz, I call him, he sells life insurance during the day. So he's sitting with customers. My background is life insurance. I still sell life insurance from time to time. My background is life insurance. And I know when I'm sitting with a client, I like to give that client my 100% full attention. I don't want to be grabbing my phone, answering and stuff. I might lose the sale. So what he will do before he goes in the house, if I put in a signal, he'll just put in a buy stop, sell stop, buy limit, or sell limit. Then he can go back and buy his business. And it'll automatically put him in the trade. You guys got it?
Mm-hmm.
All right. Any questions on the buy stop, buy limit, sell limit? Okay. Well, that covers that part, guys, on how to enter the trade. You guys feel with that information, you're able to take a trade.
This is awesome.
Christopher, Andrew, Susan, Natalie. Oh, now I know Susan. I know you. Jasmine, let me ask you, because I know like you guys are brand spanking new. Jasmine, you think you could take a trade tomorrow or tonight with the information you received?
Yeah, I mean, I would have to review the whole recording in the beginning before I decide anything.
Okay. All right. What about you, Chris? Do you think with the information you received tonight, you'll be able to take a trade?
Yep.
Or is there something else I need to cover? Really, what I'm trying to get to is, you guys have any questions about what I just went over?
No, I think if I have any questions, the most likely I just need to review the video. It's here. I mean, you broke it down. You have visual diagrams, and even this last portion of it with the buy stop, sell stop, buy limit, sell limit, it says everything that we need to learn and what we need to know.
Got you. Okay, good. I'm just like an extra thorough person, so sometimes I'll ask the same question more than once. I just like to know without a shadow of a doubt you guys got it. But
I mean, you know, if I need to, I can hit you up. I know how to find you.
Sweet. And that's the beauty of the community that we have with the Telegram. Because any questions you have, just throw it in there. Somebody's going to answer that question. Let's say you can't get directly to me or whatever. Just throw the question in the Telegram. Somebody's going to answer that question for you. And again, this is where you find it on your app. Buy limit, buy stop, sell stop. All right, cool. Whew. So that covers on how to take those trades. What I want to do is go this out. Film, you on the line with us, my brother?
Absolutely.
Awesome. Film Dogs touched on last night the pathway to predictable profits, and we're gonna be really this is our focus, guys. This keeps us disciplined. This keeps us from having to be greedy. This keeps us accountable. This is like everything. This is everything. This shows you where you will be in 10 years from now, 20 days from now, 30 days from now, 90 days from now. Like Tim was saying with the P90X for your financial status. And Tim, I'll just let you kind of bring a little more reality to just I'll let you elaborate a little bit on this right here. Basically what we want to do, and this is for everybody as well. Some of you guys have been trading already with us, and we will always, on these Monday night webinars, it gives us a chance to just kind of find out where you are. Where do you stand? For example, let me give you just one little touch. Let's say we started with a $100 account. Natalie said it earlier. You know, it's going to be discouraging because I got a $100 account. I'm only using a 1 cent line. I only trade out $4. So let's say you started with a $100 account. The first trade, really, you should only be looking for $5. Daily profit, $5. And you hit your goal. And you should get a glass of wine at the end of the night. Say, yes, I did it. I made $5. And be excited about that. Because if you keep doing that same process, that same risk management, that will lead you to, in 30 days, from that $100 account,
Hello?
yeah, I'm here. 30 days would be turned into $432. 30 trading days. That's pretty good. In 50 days, that will lead you to $1,100. And we're being conservative. This is on an average of trading, closing out 50 pips per day. This is extra conservative because I just put 2 trades in the night. So if we close out 50 pips on each of those, that's 100 pips right there. This is conservative. This is saying that we're closing 250 pips a week. We do well over that. Let me show you this chart. I touched on it last night, but now it's more reality for you guys. This is what we're doing week after week. 250, 648, 479, 306, 446. So that's well over the 250 that you need to hit those goals. All right, I'm getting carried away. Fimi, I'll let you take it on, my brother. You want to take the share and I'll share your chart? Or you just want me to just run it?
Nah, let me get the share.
Okay, you got it, my brother.
So I appreciate that, Shane. I hope everyone is getting the information tonight. Definitely some powerful stuff. So what I really want to go into is basically showing why we use this chart, how it's actually a powerful tool, and how it can actually keep the greedy monster off your back. So like Shane was talking about, if you start with a $200 account, $100 account, it doesn't matter. In this example, I'm gonna just use 200. You gotta remember, guys, that, you know, Forex is a $5 trillion per day opportunity. All we're looking to do is get 5% basically out of the market on a daily basis. As this chart is showing you, this is, you know, based on days. So usually we're looking just to hit about, you know, give or take about 50 pips out of the market. So we closed the trade earlier today, just from last night to today, and it was almost 62 pips. So this is not something that's super crazy hard to do or anything of that nature, because there's opportunities available there to go ahead and take that. So the difference is, what we're looking to do is basically take those particular aspects of getting 5% a day and then compound it on a daily basis. So I'm gonna throw something out. Maybe you've heard it before, maybe you've not. But if you took, I had an option basically, and I'm gonna show you the power of compounding. And then I'm gonna go through an example here. If you won the lotto and they gave you 2 options to take a payment, you can either take basically 5 million all up front, or you can take a penny doubled every day for 30 days. Which one would you take? So Shane, you can unmute the line and then have people answer, or have them type it into the chat.
I think it's unmuted already.
So the 2 options is 5 million up front or a penny doubled every day for 30 days. Who would take the 5 million up front?
The penny double every day.
Okay. Anybody else?
Penny double.
I'll say the penny double as well.
Okay. So we got about 4. Anybody taking the 5 million straight up? Okay. Now.
3 to 1.
Huh?
I was saying it's 3 to 1. 3 doubles and 1 5 mil. Straight up.
Okay, 3 to 1. Excellent. Anybody else? Okay, so we already obviously know what the straight up payment is. That would be 5 million. Does anybody know what a penny doubled every day after 30 days actually comes to?
10 million.
Okay, it's actually 10.7 million. So the point is, when I took economics in school, a lot of people raised their hand the first day of class and they took the 5 million. But the power of compounding is that after basically 10 or 20 days, and you start doubling $2, $4, $6, $8, that's when it gets crazy. So the point is that compound is basically get rich slow. And it's a steady method where you can pretty much accomplish a lot of different things if you just take one thing and then concentrate on it and put your energy. It's also a way to meet a lot of your life goals. A perfect example is that if anybody's been on the line and worked more than 10 years and has made $50,000, so you can do the math, 50 times 10 years, that's over 500,000. So the point is that when you do something in increments and concentrate over it, it has the power to compound, and that's where the profit comes from. So let's just go back to this example. We have 200 here. We're looking to get 5% a day, 48 pips. The first day, $10 profit, and then it goes from there. But I did something here to kind of enhance what our particular program has. So what I did is that most or a lot of people get paid twice a month. So I put some pay dates here. So we have March 10th, which hasn't obviously come up yet, and we have March 25th. So let's just say I had an extra $100 to add either from my paycheck or to add from simply inviting people to this opportunity, because every time you invite someone to this opportunity, they pay at the $100 mark, and that now becomes residual income to you. So you do something once and you get paid over and over again, versus with a job, and I'm not knocking jobs, but obviously you have to trade hours for dollars, and there's only 24 hours in a day, and we do have to sleep, at least a little bit. So the point is that if I was to add $100 every time I got paid, and if I got paid twice a month, I got paid on the 10th and the 25th, and now you see this particular chart. If I add the $100 here, and I add it here, and I keep doing that just over 90-day period, just $100. So I add $100 here, as you can see here, for the month of April. Same thing. I added it on the 10th and then on the 25th. Then I did it for May 10th, May 25th. So I'm basically mimicking how most people get paid twice a month. So now that same $200 investment, by just simply adding $100 twice during a month, look what happens after a 90-day period. 24,000 and basically $8 and some change. So that's pretty powerful, because most people are not getting anywhere like that, any kind of investment, paying that kind of money out in 90 days. So the power of compound interest is on display here. The point is that a lot of people say, you know, I'm trying to get out of debt, I'm trying to do this, I'm trying to do that. But the point is about taking this approach of using a compound mindset in a business that allows and has the affordability to just give you a 5% return daily. And then if you obviously invite people to the opportunity, the sky's the limit on where this can go. So this is what we use also to keep our daily profit in check. We're not trying to get greedy. We're only looking for 50 pips per day. Sometimes, a lot of times, we actually get more than that. But let's just say there's a day we get less than that. It all evens out for basically over the week. There's basically about 5 trading days, obviously, in a week. So the point is that even if we don't get 48 or 50 pips per day, we come a little short or we go over, which is even better, then we're looking to get, you know, 250 pips in a week. And that now puts us on a pathway of predictable profits, what I kind of call P390. And the reason I call it P390 is because this chart represents compound interest. It represents residual when you invite people. And then it represents passive income, because then after that, you can only basically take a few trades and basically continue this out past the 90-day mark, which will, you know, obviously start to even grow more and more. So this is also a way to say, hey, don't get greedy in the market. We're only here to get out 50 pips a day. Yes, it looks small in the beginning, but as you can see, look at this chart. It really starts to explode once you start sticking to a game plan. And that's the whole point with having a plan together, because when you have a plan, now you can succeed and actually keep the end in mind from the beginning. And it's going to keep you focused to say, hey, I'm not trying to get more than $10 today, or all I need to get is $12.16. If I get it, great. If I get over it, even better. But I'm not going to try to go for a big home run, because I know that there's other days that I'm trying to stick to this formula. And if I stick to this formula, the bottom result is I'm going to get where I need to get where I need to go as far as my finances is concerned. So basically that kind of wraps up my section, but I always leave people with 3 questions, as I did last night in the seminar. If someone is working a job or even a business and their money does not get up before they do, before the alarm clock do, before the kids get up or what have you, if your money does not work overtime, and if your money does not work when you don't feel like it, whether that's a sick day, a lazy Monday, or you have to take a day off, then this is the type of opportunity that can change those questions, if they're no right now for you, into a yes, and now leave the world of unknowing into knowing that you have another stream of income coming in to take care of your family, emergency, and actually start to save for retirement, because it's never too early to do that, because we have this thing called inflation, which is also growing on a daily basis. But guess what? Paychecks stay fixed while this inflation is growing regardless, whether you're in Forex or not, whether you're in this opportunity or not. So it would kind of behoove people to actually get into an opportunity just off the fact that inflation is going up, because last time I checked, English muffins in 1960 were probably way less than what they cost right now. So were Rice Krispies. But it's the same English muffin, same Rice Krispie. So obviously prices do not stay stagnant, they go up. But if paychecks stay fixed, we need something else to combat that at the very least, so we can actually be on par with prices going up. So if that makes sense to everyone, I just definitely want to thank everybody for their time. Thank you for listening and seeing an opportunity to improve your finances, your overall community, because we are a community here. And, you know, my name is Femi. I'm on the highway to freedom, and I'm definitely looking for some companion to go on that same ride with me. So with that being said, I'm actually going to turn it back over to you, Shane. I appreciate the time.
Okay, thank you. Can you hear me?
Absolutely.
Awesome. So guys, this chart right here, thank you. Oh, leave it up for me, Femi, if you don't mind.
All right.
What I'm gonna do, guys, that chart that Femi, well, I can share, right? There's no big, I'll take the share. Okay, you got it. This chart right here, well, let me take it. Well, nah. Just go to the top for me.
Okay.
This chart as well, I'm going to put in the Signal channel right after this program, so you can have your own version of it. And whatever you're starting with, you can just put it right there. You know, this is Excel, so it will automatically kind of populate everything for you. You know, what the goals are that you should have. And, you know, it's really cool on the other side, has some nice little, you know, little tidbits. You know, your daily, weekly goals and what that would equivalent to at a regular job and things of that nature. But this is a little tool that we're going to give you as well so that you can keep track of what you're doing. What's that famous thing you say, Femi? Anything that can be tracked can be changed or something like that?
Yeah, one of my favorite quotes is anything that can be tracked can be changed. So what happens is that, as most people probably heard on this line, that most people who get into business, they wind up getting out of business anywhere between 12 and 18 months. And I really feel that is because a lot of times is that they don't have a game plan in the beginning to actually track everything that they're doing in that business. So by the time they find out that, hey, inventory is too expensive, I'm paying too much for this employee and da-da-da-da-da-da, it's because they didn't have something like this, a spreadsheet right from the beginning to recognize, hey, there's an issue here. We're paying too much for this cookie dough. John is getting way too much money. So anything that can be tracked can be changed. And if it can be changed, then you can make the adjustment and save the business.
There you go. All right. Thank you, Femi. Natalie has a question. 1 second, Natalie. I think it's cool. You should raise her hand. I didn't know you could raise your hand.
Yes. I have the same chart, and I have a question. Shane, up at the top where it says the take profit 48 and the stop loss 15 to 20. Right below it has that 2 cents, 2 cents. Is that the lot size?
Right.
Okay.
That's the lot size you should be using when you're at, you know, and it's the same.
Okay. So it's the lot size in proportion with the balance that you're starting off with. Okay.
Exactly. Which is pretty much mirroring what we're putting in the signals anyway.
Right. Okay.
Any other questions about this chart, guys? Let me see if I got everybody. Any questions about this chart? I'm going to be sending it out to everybody where you can download it on your computer with your phone, and you can use it to keep up with your stats. All right, so that's pretty much it for the night. I forgot one thing about a close the trade, which is pretty cool. I'm going to show you really quick.
I'm gonna give you the share, Shane.
It's really quick. I know you can see it. So, for example, if we wanted to close this trade, what you would do, this is what an open trade looks like. So if you wanted to close this trade, you would just put your finger over top of this area right here. This is an open position, what an open position looks like. You just hold down on top of this EURJPY. There's going to be a drop down option that comes up, and it's going to say close trade, and you just hit close trade. Simple as that. All right. So, hey, it's been a pleasure. I'm going to unmute everybody. It's been a pleasure speaking with you guys tonight. Hopefully, you want to take something that will help you go into the races. Again, if you have questions, you can get me directly. If you have a pen and paper, I'll give you guys my number right now. It's 515.
Can you repeat that? I didn't get it.
I'm telling you, in Pokemon,
Shane, can you repeat that? I didn't get it.
It's so ridiculous to know which one's who. Because they put the same.
It's 516-425-0390. Again, 516-425-0390. You can call me at any time, and even better, shoot it. If you have a question, just shoot it in the group. Shoot it in our community. That's what we have it for. As well, everyone should be in our Facebook group as well. We have Facebook. Now, as you guys go along and get results from what you're doing, you're gonna probably want to start thinking about inviting folks to the opportunity, especially at least I encourage everyone to get at least one person so that your platform is free, so that you're not paying out anything every month because you have somebody, because you break even with one person. So one of the ways to do that is to invite other folks in our Facebook group. Then when they see that type of activity, that we share our profits and different things of that nature, it works out for you as well. So you should be in our Facebook group. You're in our Signals channel. You're in the Telegram. I think we're good to go. Guys, it's been great. Have a great night. Stay tuned for the signals. They're going to be coming through. And we'll talk to you later.
All right. Good night.
Good night.
Good night, guys.
All right, later.
Good night.